Morning, everyone. Welcome to our webinar, Garage Insurance Made Easy. This is a great webinar because you're going to learn a lot about garage, and garage is a unique coverage. Let me start by introducing our webinar instructors, Dina Glab, and who is our senior garage underwriter with Music Insurance, and then Kimberly, or for short, Kim Mosley, our senior garage underwriter with Music as well. So we get two great underwriters today. I'm Anae Augustini. I'm CEO of CID Insurance Programs. We also have Teresa Cochran, our garage underwriter here at CID. And then last but not least is Jacob Cole, who's our marketing specialist who makes everything work behind the scenes for us. So let's go ahead and get started. Okay, I'm going to start with some objectives. And really, one of the most challenging things about writing garage is there's a lot of coverages, so that the application is a great place to start so you can better understand what the application is asking for, and it will also help you identify the coverages unique to the garage form. And then in addition, you really need to be able to understand what each garage risk may need for coverage. So Dina and Kim are going to help you out with that today. So let's talk about logistics. Everyone is muted, and you're not able to hear. You're able to hear but not speak. But your voice is really important. So we've got the chat room, and we'd really like you to ask questions as we go through the webinar, and we'll stop and answer your questions as they come in. So really important. Please ask your questions. So without further ado, I'm going to turn this over to Dina and Kim to get started.
So we're going to start with the application. So we've got the garage coverage form has multiple unique coverage exposures. And we want to make sure the insured is always offered all of the coverage that they're going to need. We're going to use this application to guide you guys through the process. And on to the next page. So first off, we've got the first page of our garage application. This is actually a copy of Music's garage application that we use. We've taken quite a few of the different carriers and conglomerated our actual application. So we feel that if you are to complete this in its entirety, we will prevent a lot of going back and forth with the actual underwriter, and we'll get your quote back out to you guys a lot sooner. So it's important to enter the information at the top of the application. So we need the entire application name and whether or not they have a DBA, their physical address, physical mailing address, and then all of their contact information at the top. So Kim, can you?
Part of this too to be aware of is we're asking for years in business and years of experience in the field. So they can be a new venture, meaning they haven't had prior insurance. So please make sure you also list how many years of experience in the field. That will really help us understand that they have good knowledge of whatever they're doing, whether it be a repair shop of some nature or even as far as a dealer, because dealers as well, this is the application to complete for that. That's why you also see underneath the years in business that if a new venture, describe the experience. So kind of tell us what they've been doing. Further on that right-hand side of this application, we look to see the type of business entity it is. Is it an individual? Are they a partnership or joint venture? Is it a corporation? Is it an LLC? That lets us know too a little bit better on how to handle the account. If it's in an individual name, we may have some other concerns depending on what the business operation is.
Kim, would you like to address the description of operations and provide a little bit of what you're looking for there?
Exactly. Under that description of operations, it could be, the aspect that they are stating they are an auto repair, okay. Car repair, they are doing what to some detail, just a quick little detail on the type. They're just general maintenance. They're an oil lube operation. They're a detail shop. All of those can fall within an auto service, if you will, operation here. So if you can give that kind of detail, a real quick little something there saying the nature of their operation, because a lot can fall in within that auto repair. Perhaps they're working on larger vehicles. Perhaps they're doing heavy service trucks. That would also be something you want to place on this particular line for description of operations. They're doing heavy truck, tractors, and trailer repair, for example. Perhaps even a valet. If this is a valet operation, you're going to put valet on that. If you're looking at a dealer, an auto dealer, they're doing just light units, or are they heavy truck dealer? Are they equipment? Also, are they heavy truck and contractor equipment dealer? Those kind of details are very helpful on that description of operation line. When you look, thank you. When you look down further, you're going to get the percentages there for the auto exposure. Give us an actual percentage within those. So if they're doing a little bit of everything, let us know that 50% of it is auto service, is used passenger vehicles they're dealing with, and then they see maybe 5% of something else within that category, say trailers or motorcycles, or give us the percentage breakdown on that. That will also help us down as we review the policy, the account, to know how to classify that particular risk that you're presenting to us. The next little question you see on the screen here that says, do you? If they're using subcontractors, we want to know that they're obtaining that cert of insurance from any subcontractor that may be out there. These are just little tidbits that help. Do you loan, lease, rent autos to others? That's another exposure they have. And that we look at how we're going to handle that exposure for you. Weapons, of course, can be a little bit of a cumbersome thing. Some places will have weapons on it depending on where they're located, so we need that information. Animals, most carriers have some kind of animal exclusion. We want to be aware of what if they have animals on this premise or not.
And then another little side note to the loaning, leasing, and rental operations. You know, it's not necessarily that we don't like to offer these coverages. There is automatic coverage for a customer while leaving their vehicles in the shop to be serviced. It is stated in the coverage form that if the insured would like to lend a vehicle to that customer because they're going to leave it in overnight, there is coverage for that. However, you know, we don't offer the renting, you know, operations, the overall operations, but it's something we can still consider and just add an exclusion if need be.
And a quick tidbit on the subcontractors. A lot of people don't understand when that would happen in a garage type of risk.
Exactly.
I catch it a lot on the inspections because you know, either the broker's not asking the right questions to the insured, or the insured is not knowing what a sub is. So if you wouldn't mind quickly going over an example or two.
To clarify that, you may have a repair shop that all he's actually doing is maintenance work, engine maintenance work, but something specialized needs to be done. So he may send a vehicle out because it's needing transmission work. So he sends it out to a subcontractor to work on that transmission for him. He needs to get cert of insurance from that particular operation, that they have insurance in place. So any of that work that is being done on that transmission would fall under that subcontractor's insurance coverage, not his own. If he's using subcontractors like that, he's sending something somewhere else to be repaired, then if they don't have their own insurance, that work could potentially fall back on his insurance, your client's insurance coverage.
I tend to
Which
see
would
quite
cause
a
an
few
increase.
service shops. Go
Yeah.
ahead, Ani.
Would that be that would cause on an audit an increase in premium?
It could, yes, because if they don't have insurance in place of their own, we're going to consider them an employee of the insured.
Correct. Okay. We have a question that came in, and it goes back to the valet statement. What would valet parking be used for on this type policy?
Valet always has an auto exposure. They're in there getting in that car and taking it somewhere in that lot, or they might be pull it out onto the public roadway and park it in the lot next door. They have that exposure for while that car is in their care, custody, and control. So one, you want them to have liability coverage for the section of the premise that they control, that section of the lot, wherever that lot of that restaurant, if you will. So that premise that they're controlling is this corner of the lot and around their podium, as well as liability coverage for when they're operating the customer's vehicle to place it somewhere. And then you want them to have garage keepers for the actual care, custody, and control of that vehicle while it is in the valet's CCC. So that's why they need a garage. It's focused on the auto, not necessarily because they do repair, but because they are handling a vehicle.
Okay, great information. One more question is, will this program provide coverage for a business that owns autos and is renting them to others?
No.
Not necessarily, no. Most carriers will exclude any rental operation. True rental operation is excluded by the coverage form.
Yeah, we
Whether
at
it's
CID,
equipment.
Oh, I'm sorry. I was just going to let you know, at CID Insurance, we currently don't have a market for a rental car business. I get that question all the time.
Yeah.
Yeah, whether it's a car, a truck, equipment, contractors type equipment. We have a lot of risks that have a U-Haul operation on their premise. So, it's something we can still consider the overall operation. However, we're going to exclude all U-Haul operations. But again, the overall leasing and loaning is excluded. So the dealer section, it's very important that you guys have this in its entirety. We tend to see a variety of consignment, broker, exporting, importing, internet, retail, and salvage and wholesale exposures out there. So it's very important that you do, indicate the percent breakdown, and as well enter the number of vehicles sold per year and the number of plates.
And to kind of help with the clarification on what these are, a broker is going to be setting up the deal, if you will, between the buyer and another dealer, whoever is selling the vehicle. A broker may not actually take possession, but since all of us that live in that world to a certain extent, a brokerage world, is you're setting up the deal between the two. They're importing some vehicles from somewhere. What we tend to see is a lot of dealers will go to Canada. They can get a good deal on autos up there at auction. So they'll import them from Canada to to add to their location, their lot. That's the part you want to be aware of. Are they importing from outside the country? Salvage, reconstruction, titled autos, that's pretty common. They can pick up a salvage auto, reconstructive title at an auction as well, so we want to know how much of their operation is that. Those vehicles may need to be sold as is, or if they're doing repair to those vehicles, we want to be aware it's a little different title than, of course, your regular title. So we want to know the percentage of those if they sell them. Consignment, of course, are those guys who are selling it for somebody else on their lot. How much of that are they doing? Hopefully they have a consignment agreement as well in place, and we would be asking about that if we saw they are doing a percentage of consignment sales. Internet, who isn't advertising on the internet? So how much of their operation is really done via that internet and sight unseen sales? Most of the time the internet is a local thing. Lord knows we all go to the internet for a little bit of everything anymore. And you look, oh yeah, that's a nice car, I want it. You send out the little note to whomever and say, I'm interested in this car. It's possible now to complete that wholesale on the internet, and we want to be aware of that if that's how they're doing their business. Wholesale is selling the vehicles between dealers. There is no sale to the public. They are selling it at auction, or they're selling it to another dealer or buying from another dealer, but there's no sales that they do to the public. And exporting, they are selling and shipping the vehicle somewhere out of the country. We want to be aware of that. And of course, the last there is retail. They are, and under retail, we find they typically are doing a variety of sales. They're selling not only to the public, but they may be doing a little bit of wholesale or brokerage sales as well. So if you can get a breakdown on it, this will help you with that breakdown. Definitely. There you go. Non-dealer operations, nature of business, and you'll see there it says repair on premise or mobile repairs. A lot, especially when you're talking heavy truck, they will do mobile repairs. They're going to truck stops and working there, or they're doing it on the roadside, that aspect. A lot of repair operations have both a shop that the customer brings the vehicle into and they can work on it at the shop, but they also have the ability to pick up that call and say, hey, I'll come to you right now. Especially with our recent COVID battle we're in the midst of. A lot of services are offering more mobile. I will come to your driveway and work on your car in your driveway for you. So be aware of that. Dina?
And then, so some of the important questions to ask, a lot of times, we'll get the application and a lot of these are blank. These are actually really important to us. We just want to know whether or not, the customers are driving the vehicles into the bay. I recently had gone over to the Firestone to get my tires rotated, and they actually made me drive into the bay. And just because of the whole COVID issue, again, that's going to happen here and there, but it's still important that they do complete these questions. Are they parking on the public streets? Basically, have any of the no smoking signs? Are they allowing customers come into the back? Are they picking up and delivering customers' vehicles? It's really important to know, if they are, how far are they driving? Is it just a couple of miles, or are they driving over 50 miles? And again, how many times per week? If we do have the pickup and delivery of customers' autos, again, we're going to want a copy of their motor vehicle record. We want to make sure that they've got an acceptable MVR and that it's rated appropriately. if for some reason we have a service repair shop and they are selling some autos, it's something that we can consider. We just want to know how many per year. And if there are any other types of sales exposures, we just want to know. We get a lot of service shops out in the middle of nowhere where they might have a gas station on hand. So we're going to want to know how many pumps, what their gross receipts are, any other type of exposures that would pertain to something like that.
All of these things increase the exposure for us as the carrier, the insurance company. So, and it could mean we handle it slightly differently. Not that we may walk away from the quote, but that we're going to look at it just a little bit differently. And it's good to have this information prior to releasing your quote. You get a more accurate quote in that method.
This overall section is one of the most important to complete in its entirety. There's a lot here, and if we prefer that you get it to total up to 100%. They might do just a big variety of everything, but again, it's very important that they complete each of this section when it comes to the service side of garage.
Most repair shops are going to specialize in something, but some are jack of all trades. So yeah, just keep in mind the total is to 100%. And we get a variety where it totals to 149%, for example. So we'll go back and ask for clarification. So as you're looking at this, if you can make sure it totals to 100%, that's a big plus on that part.
Us. Yeah, and if there's other types of exposures that you don't see on here, feel free to elaborate on that, because I'm going to come back and ask you. They'll put other and then just leave it at 20%. Well, I'm going to want to know exactly what that other consists of. And just a brief detail, again, it prevents a lot of going back and forth between the underwriter and myself or Kim.
Tires can be a concern for most carriers out there, and we want to know the breakdown between new and used. For us, we prefer the new tires over, of course, the used. Most guys who are dealing in tires will have a percentage of used that they deal in. So it's important to get that percentage refined there on that and indicated. We want to know the aspect of if they're doing it on heavy trucks, how old those tires are that they may sell. Yes, you can have a new tire that they kept in the back room for a number of years, and hopefully it's not older than a couple of years old, because it's a unique size. So they keep it, but they don't have a call for it very often. So, and tires do age and will create problems the older the tire is. So that's why you see that question on here. Used to see this. I don't see this much anymore because all of us carriers have kind of stepped back from even remotely considering any rental or lease of tires. So, but that is still on our app. We want to be aware if they do offer that, because tires are awfully expensive. So there's that scenario out there. Quality assurance on how that tire is installed is really important. We want to be aware not only is the technician who's installing it what their process is, but is there a recheck of it by another tech? It's always good to double check that the lug nuts were tightened properly, that they have a certain process they follow of counterbalances in that, their installation process. Rim repair is becoming more and more commonplace. Most tire dealers will offer some type of rim repair service. It's not maybe the big portion of it. Some of that repair may be cosmetic only, and some they actually are straightening the rim rather than replacing it for whatever reason. So we want to be aware of that. And most of the time, if they're doing a bigger repair process to their rim, then they are going to be removing that tire and wheel rim from the car, and we need to be aware of that. Some of the cosmetic repairs are just that, they're shining it up and doing a little touch up on it, if you will, and the tire and wheel can remain on the vehicle for that. So we want to be aware of that difference.
So it's important that we get a complete list of every single employee, and whether it's service or an actual dealership, we would prefer to get their status, whether or not they're furnished an auto, are they using the vehicle for business use, are they just handling clerical work, mechanical work, where they're not driving a customer's auto. So as long as you're pretty specific on the employee list, we appreciate that. A lot of times we have a contract driver or even the contract driver exposure. So just indicate there in the fields on whether or not they have that available. We, if you have an employee who's under the age of 21, we are going to need their MVR prior to for a prior approval. As everyone under the age of 21 is excluded, we'll still need to rate for them. However, we just need to review their MVR in order for them to drive and have.
Unreported employees, even if you think, well, they're not getting in that car, they're not doing anything, they're just the little clerk in the back room, they create an exposure on the premise. They may not be touching an auto in any way, shape, or form, but they are an exposure to the entire operation. So we need to be aware of all employees. Thank you. In some, in some states we can schedule an auto. So in some types of businesses, for example, a repair shop may have a service vehicle. They need to be covered. That's the little vehicle that they're going out to do a roadside something, or perhaps the vehicle they take to go get additional parts. Schedule it. Dina.
Sorry about that. So the garage liability. So this section is obviously very important to indicate the limits that you're requesting. The standard limit is usually $1 million in liability, and the overall aggregate we can offer is $3 million. We're going to want to know if they're doing any pickup delivery. So you would just indicate the mileage radius. We have the dealer's errors and omissions. So you would just check accordingly. And then if for some reason we have some additional GL operations, a lot of times, we might have a service risk or even a dealer where they have uninstalled part sales. So we would go ahead and indicate the receipts on that particular section. So we've got
for that, yeah.
Or what?
You.
And then we have some automatic exclusions that are listed on the MUS 70002 form, and then we have some other exclusions to the right. Can you explain a little bit of those, Kim?
Those exclusions, expected or intended injury, is within the form itself. So if we can, if you see a scenario and it's you kind of undoubtedly what's going to happen there, it's going to result in an injury, then there's an exclusion on the form for that. Some of your contractual agreements within the garage form itself are not covered. So we want to be aware if they've got some contract relationship out there for their liability, how to be aware of that and be able to say, yeah, this is covered or isn't covered. We could continue on. Workers' comp, of course, you're always going to get workers' comp coverage. That's excluded in the form. Property of others under liability is excluded. That's where you will end up buying it back via garage keepers, for example. Pollution, not very many people cover pollution anymore on it, and the coverage form will exclude pollution. So for example, there and if they're working on some tank and it spills out oil, that's pollution, that's not going to be covered. But if it's drainage from the engine they're working on, the little bit of cleanup from that's going to be covered. Leased autos, we've talked about that a little bit, touched on it a little bit earlier, and the coverage form excludes the leased autos exposure, leased or rented. If they're accepting a fee for that auto, that's a different type of operation. It's not being loaned. That is excluded on the coverage form. Racing, of course, is excluded on the form. That's an additional exposure. So if you have a risk that's involved in racing, they either own a race car, or they're doing a lot of preparation for on a race vehicle, that exposure, that getting that vehicle ready, would be excluded on there. Work you performed, to some extent, completed ops would be covered, but the work itself, the part that you broke, won't be. So it's a weird coverage form, I admit, but that's what falls in there. On the right-hand side, left-hand side there, the auto limit, as you're completing this, the auto, as Dina said, you may need $1 million in liability. That's going to cover any of those autos if related to an exposure for that auto. The other than auto is related to the premise and the work he's doing. That could also be up to $1 million in liability limit. The aggregate applies to that other than auto exposure. So similar to your GL portion. So think of that other than auto and the aggregate similar to your GL policy. That's the GL portion of a garage policy. Okay, thank you. Garage keepers. Garage keepers buys back that CCC that's excluded on the liability portion. So this is the physical damage, if you will, for the customer vehicle while it's in your client's care, custody, and control. On it, you have various bases for the garage keeper's coverage: legal liability, direct excess, and direct primary. Direct, let's start with legal. Legal liability, think of it as you can only be held responsible for your own negligence. That's it. So that's why you'll see, okay, there's no wind, hail, flood coverage. That's, you can't be held responsible for hail damage to that vehicle. Direct excess falls into covering for kind of a courtesy thing. It helps pay that additional deductible that may come into play for the insured. Direct primary is what a lot of insureds want in relation to, and what as agents you may encourage. It think is more of a aspect of a courtesy coverage to some degree. You're going to cover it regardless of negligence by the insured. That helps there, kind of a lot of courtesy, if you will. I always give the example when I'm walking through it of the customer brings in his car, and after the insured is done working on it, they notice a scratch on the side of it. Now, the insured knows he didn't put that scratch on the side of the car, but it's damage to the car while it's in his care, custody, and control. And the owner of the vehicle says, I didn't do that scratch. You need to pay for that, fix that scratch. Under direct primary, that would be covered. Could be covered. You have the choices under garage keepers similar to what you have in physical damage. You could do comprehensive and collision or specified causes of loss. There's going to be specific things that would be covered under specified, and for comprehensive, if it's not a collision, then it's going to be covered under comp. Usually the broader coverage at comprehensive is what we see the most. You see there as well, under that, the location number 1, location number 2, limits of coverage. Each location, if he's got multiple locations, he may have more vehicles at location 1, so he needs more coverage for the customer vehicles at location 1. He may have 10 vehicles on hand at any time at location 1, where he only has 5 at location 2. So maybe he wants lesser coverage at location 2 for garage keepers. The max value or limit per vehicle is exactly that. How much is his at any location? Will he see for that a particular unit? If he's getting in Ferraris and working on Ferraris, chances are that max limit's going to be pretty high. If he's working on brand new semi tractor trailers and stuff, you may see that limit be pretty high. But if he's just working on the common vehicle, he may only need about 25, 30,000 on there if it's an average Joe Blow vehicle out there. But on, like I say, a truck tractor, he might need 150,000 as a max value per vehicle. We use that to understand and help look at the overall garage keepers exposure that we have. Dealer's physical damage. This is for those owned units that a dealer has. He wants physical damage on the vehicles he is selling on his lot. There again, you've got comprehensive and collision available to you, and specified causes of loss and collision available to you. We won't do just collision, and we won't do just comp. You have to have both comp and collision, or specified causes and collision. We get that question once in a while. Can I just do collision? No, we require comp with it or specified with it. Specified is going to be specific causes of loss, whereas comprehensive, if it's not a collision, chances are it'll fall under comp. Same thing in regard to limits. If he has multiple locations, he may have different sizes of numbers of vehicles on those locations. So he may have a different need for a higher limit at one location as opposed to another. And there again, the max limit per vehicle that he sees for all locations should be placed on there so we're aware of what he's dealing with. Deductibles range from, you're going to do, could be at 500. We do, and then you've got a max level that applies. So if he's got some losses, it'll be a 500, and it's 5 times that 500 that it would max out at on this. False pretense coverage. That is in essence coverage that he's being for if he should, as a dealer, be tricked, if you will, out of releasing a vehicle and it never comes back. So we like, usually the tricking involves more of a test drive scenario, but it's not uncommon that this also would be in those scenarios where false identification was provided and false confirmation of a loan was done based on that false ID. That also falls under false pretense, if you're wondering what that provides. So there's that. When you're looking at it at the account and you're trying to figure out how to calculate what he's really going to need, it's a good idea to think, okay, he says he's got 10 units on a lot at any one time, and he averages for those 10 units about $5,000. So on average, he has a value on that lot of $50,000 for that particular lot. But on occasion, we got to keep in mind that max limit per vehicle. So he may get more than a $5,000 vehicle. Maybe his max vehicle is 15. So play that into your calculation of limit that he might need on that same lot. If he's going to have every so often a $15,000 vehicle, maybe that $50,000 for his lot is not sufficient. You need to bump it up a little bit for his lot to accommodate that higher valued unit on there. So that'll assist in that way when you're looking at the limits that apply under physical damage, if you want to make sure he's sufficiently covered for that. This kind of the standard exclusions you see here of nuclear hazard, war, those are all pretty standard for any coverage out there. Those are going to be excluded. Any covered auto that's leased or rented is not going to be covered by this. That's out of there. Also, any covered auto used for professional situation, the racing or the demo contest, that's typically excluded. Keep in mind, we're not paying in a loss. The profit, this is based on what did he get buy that vehicle for. We are just making him whole. Insurance is to make the insured whole, not to provide coverage for any profit he may think he needs. Loss to any covered auto displayed or stored at any location. That's kind of a temporary location aspect to this. So we need to be aware of all the locations he may use. If he's transporting a vehicle back and he's storing it in a location for just 10 days, he'll have automatic coverage for that vehicle for a while. But if he's going to leave it stored somewhere more than that, 45 days, we need to be aware of that location. He won't have coverage for that vehicle at that location because we're not aware of it after that part of the time. There again, unless you select false pretense coverage, it's going to not be applicable to the policy. That's a separate coverage. Dina?
So we've got some additional endorsement options. We've got the personal and advertising injury, the host liquor liability, the damage to rented premises. I think Kim's better at explaining what each of these are than I am.
You're doing great. Broadens you see on some of your GL right now. Within that, it's got the personal injury and the damage to rented premises. Personal injury liability relates a lot of the times to the advertising, kind of think as a slander issue there. Damage to rented premise, if you've been doing it a while, you also think of it as fire legal. Don't do that. Think of it as damage to rented premise. So if he's renting the location, he may want this coverage. He's not going to get coverage for the building because he doesn't own the building, but he can get coverage to it based on damage to that being rented. So that's on here. You can also do each of those as individual coverages. Broadened is kind of all inclusive and a nice little thing to help you on that. So all of those fall within your nice labeling out here of broadened. What down below there for you. Additional insured options. If you've got any additional insureds out there, we can help with that, and it's owner to the damage to the premise itself. So he may ask for damage to rented premise. Well, I bet you the owner of that premise is wanting some coverage there. The designated insured, there's some clients he may have that want to be named as an additional insured. That's the form we apply. If he's got a lot of additional insured that he needs to be aware of, you may choose to have blanket additional insured. We can provide that. We'll ask what's going on, how many contracts does he have out there that are requiring to be named as an additional insured. Give us that information here and we can help you out with that. We don't tend to see a lot of grantor of franchise, but that is available. If this is a franchise service risk, we need to be aware of that. He may be wanting, the franchise provider may be wanting an AI on them. Leased equipment, that's some of these shops get pretty big pieces of equipment that they need, and they're going to lease it rather than try and buy it. It gets a little pricey. They'll need an AI on that as well. And of course, a lot of these are wanting a waiver of subrogation. We can help in that scenario. Make sure you advise who is wanting it and what their relationship is. That's that bottom line. Provide the interest, if you will, in the insured that we have. Okay, next slide.
Well, thank you so much, Dina and Kim, for doing such a great webinar for us. Great information that you provided. I hope it helped all of our participants today. And Teresa Cochran is your underwriter, so you want to make sure that you're sending over your garage applications today. You can contact Teresa with any questions that you have. She's very responsive. And I just want to thank you all for joining us today.
Thank you, Kim. Thank you, Annette.
Thank you, Dina.
And
Thanks,
Teresa,
guys.
and Jacob. Thank you so much.
Have a great day, everyone. Bye.
You too.
Bye.
Bye.